So, you're thinking about buying a home in Florida. Well, you've picked a really interesting time to start looking. Today, we're going to break down exactly what you can expect in the housing market over the next couple of years, because things are changing and a pretty big recovery is on the horizon.
If a move to the Sunshine State is on your radar, you're gonna wanna listen up. After years of, let's face it, pretty intense competition, the market is finally starting to shift. That period between 2026 and 2027, it's not just 2 more years on the calendar. It's shaping up to be a huge window of opportunity for buyers. So let's get into what's actually going on.
Okay, so to really understand where the market is going, we first have to talk about where it is right now. You can think of 2025 as this crucial year of a big ol' reset, and it's basically setting the stage for everything that's coming next.
The phrase you're going to hear experts throwing around is a return to normalcy. So, what does that actually mean? Well, it means the frenzy is over. The days of insane bidding wars and those eye-watering double-digit price hikes, they're behind us. We're now in a more balanced, more sustainable market. Now, this isn't a crash. It's more like the market is just taking a much-needed breath, which is fantastic news for buyers who finally have a little room to think. This chart right here shows you exactly what that shift looks like. See where it says months of supply? That's just how long it would take to sell every single home on the market right now. Back in 2023, it was a razor-thin 2 months. Crazy. But look at 2025. It's jumped all the way to 5.2 months. A healthy, totally balanced market is right around 6 months, so we are so close. The bottom line here is simple. More homes on the market means more choices and, frankly, more leverage for you. All right, so the market is rebalancing, but what's going to actually drive the recovery? Well, it really comes down to three key economic forces that are kind of acting like the engine for this whole turnaround. You can think of these three things as the engine of the recovery, right? We've got mortgage rates that are gradually coming down, really strong wage growth, and that constant flow of new people moving into the state. Let's break each one down. First up, mortgage rates. So this timeline shows they aren't expected to, plunge back to those historic lows we saw a while ago. But what's important here is the trend. It's a slow, steady decline. We're talking from 6.1% down to 5.7%. And while a few tenths of a percent might not sound like a huge deal, on a 30-year mortgage, believe me, that gradual drop makes a real difference in your monthly payment and what you can afford overall. Now, the second driver is a really big one, wage growth. And we're not talking about tiny little increases here. Projections show annual wage growth hitting nearly 10% in major metro areas by 2026 and then over 10% by 2027. This is all being fueled by a ton of higher-paying jobs coming in areas like tech and healthcare. And here's the crucial part. Incomes are projected to actually rise faster than home prices. And finally, the third driver is the one that's really the long-term backbone of Florida's market, sustained migration. People just keep moving to Florida in huge numbers, especially from states with a high cost of living. This constant demand for housing provides a really solid floor for the market, which helps prevent major price drops and just ensures a steady path to recovery. Okay, so we've got a rebalancing market, and we have these three powerful economic drivers pushing things forward. But what does all of this mean for the bottom line? The actual price of a home. The recovery isn't going to look the same for every type of property. It's really a tale of two markets. For single-family homes, the forecast is strong. Sales are expected to bounce back, and prices will see some steady, healthy appreciation. But for condos and townhomes, it's more of a stabilization story. That part of the market has been dealing with an oversupply and some new regulations, so sales are going to flatten out, and prices will start to firm up and rise just a bit by 2027. This table from the Miami Realtors forecast really drives that point home. Don't worry about memorizing all the numbers, just look at the trends. See how the percentage change for single-family sales turns positive and grows in 26 and 27? Yeah, now compare that to the condos, where the decline slows down and finally just barely ticks up in 2027. It's a really clear visual of those two totally different recovery paths. Okay, this brings us to what I think is the real aha moment of this whole thing. We've talked about lower rates and higher wages. Now we're going to put it all together and see what it really means for your actual purchasing power. So, based on all the data and the forecasts we've just looked at, Miami Realtors crunched the numbers to figure out what a typical two-earner household can actually afford. You're going to want to see this. In 2025, our baseline for an affordable home price is $434,000. A pretty solid number, right? But just watch what happens next. Just 1 year later, Thanks to that powerful combo of wage growth and slightly lower interest rates, that number jumps by nearly $60,000 to almost $500,000. That's a huge leap. And then by 2027, it blows right past that $500,000 mark to over $552,000. I mean, just let that sink in for a second. That's an increase in your potential buying power of over $118,000 in just 2 years. That is the real story of this recovery. So, knowing everything we've just covered, how should you actually approach buying a home in this new environment? Let's put together your playbook. Okay, here are the 4 key things to remember. First, expect more options, all thanks to that higher inventory. Second, remember that affordability is improving. Your budget might actually be bigger than you think. Third, and this one is so critical, strategy now matters way more than speed. This isn't a market for making frantic, panic decisions. It's a market that rewards careful planning. And finally, think long-term.
And that long-term wins point is backed up by some solid data. When you factor in building equity and, rising rents, which are still climbing 4 to 7% a year in Florida, the break-even timeline is surprisingly short. For most people who are planning to stay in one place for 3 years or more, buying just becomes the smarter financial move over renting. It's as simple as that.
So there you have it. The frantic seller's market is officially in the rearview mirror. What's emerging is a much more balanced, opportunity-rich environment for buyers. All the pieces are falling into place for a steady recovery that's going to reward those who are prepared. So the only question left is your plan ready?